Good afternoon, everybody, and welcome to Live Market Analysis ASX Edition. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia. It's a pleasure to be with you as we delve into your Aussie portfolios, try and turf out some of those that aren't going so well, keep the ones that are doing really well, and find some new ones. Also, the agenda for today is pretty simple. I'll throw it over to you. Find the Q&A window on your Zoom session if you're joining me live in Zoom, or you're on any of the streaming services, YouTube, Twitter, LinkedIn, Facebook. There should be a window somewhere there. You can type in your requests. It's Ask Me Anything. I'll give you my best technical and fundamental reader on the stocks in your portfolio. To kick us off today, Adonis, who is one of the Live Market Analysis regulars, has actually got in touch with Khan, coincidentally, and has requested a couple, and as Think Markets clients always get priority. We're going to do Adonis's first, but we will get to everybody's requests, no doubt, before the end of the session. Adonis has SLR, which is quite topical, gold stock, Silver Lake Resources, and maybe snapshot that in your mind. And what I'm talking about, of course, is the Amy broker screen. There it is, snapshot that in your mind, because what we're going to do is go and make sure I've got the latest update. I can do that off screen, but head over to the gold price. Obviously, we're looking at a gold stock. Let's have a look at the gold price, which is over here. And we can see we've had a little bit of a pullback over the last couple of sessions. We looked at it last Thursday before, obviously, the Easter break. So it was hovering around 2000. It's pulled back to 2020. Look, these last couple of candles, are they so sinister as to suggest that this bull market in gold is over? Should we be taking our profits and looking elsewhere? I don't think so. I think we're still okay. I'm just going to switch over to here because I've got all my scratchings, don't I? We can see the previous high there at $2,070 an ounce is a little bit of an issue. We can also see some of the potential demand levels in here, so previous areas of supply, previous POSs as we call them, tend to act as points of demand, and we can see through here there's quite a great deal of congestion in that 1960 to 1980. So I'm going to suggest that we're going to see some demand in that zone. We can see that the short-term trend zone is around there as well, and that should support prices. So I'm going to say as long as we're above, well, certainly that's a pressure point there, 1943. But if we give it a bit more room, we say as long as we're above 1934, this short-term uptrend in gold is still in place. It's not going to feel good though if we get there, is it? If we come back, another $50 US an ounce, we're going to see some damage done to our gold trades. Even if it does hold that, then continue to go back up. So a little bit sketchy these last couple of days. If I can give you some guidance, I know that this is probably not the definitive answer you want on gold, but I can only give you what I can see. We've got a strong trend. We've got strong candles, but we're pulling back within a tight range and testing a demand zone. Okay, in summary, silver looks better, I would suggest. We've got some scratchings here, obviously, because of the Easter break, but that looks very strong. Gold's pulled back a little bit. Silver is just invincible. It's just hanging up there. And normally when prices go up, you're going to see some supply. Nothing's better at dragging supply into the market than higher prices. We've seen actually, if there is an increase in supply, it has been more than accounted for by demand in the system. So I'd say silver is looking far stronger than gold. And we might look at some other gold and silver stocks as well in a second. The other thing I want to point out before we run too far away is one of the key drivers for the gold price is this one here. Well, it's actually not Bitcoin, but coincidentally, Bitcoin and gold are moving to the beat of the same drum. So we digress a little, but I do want to get over here and show you the 2-year yields in the US. Okay, so the reason why gold's had those 1-2 black candles is we've had 1-2 white candles here, and that's a live candle, so just discount that. But this pop back up in yields is what is hurting gold ultimately. Okay, so we're going into this eyes wide open. Let's get back then to the stock in question, which is Silver Lake, and we might go through the entire list. Silver Lake Resources there on screen. has underperformed the gold price. Let's face it. If we look at the best ones, for example, Newcrest today, Newmont Mining revising the takeover. Now, the value of the takeovers, give or take, north of $32. And I have had a few requests coming through social media this morning asking, hey, Carl, why is Newcrest not trading at 32.40 where it should be? And there's some really important and good reasons for that. First and foremost, it's an all-scrip bid. So the value of Newcrest is a moving target by definition because it depends on the final value we get on the day that the takeover deal is done for Newmont shares. And that's the chart of Newmont there. And you can see down a little bit last night to about $51 and some change. Looks okay, not great. I mean, trying to get above its long-term trend zone. But if we're doing technical analysis on this, we would say there's enough in there to hold it, but you're hardly going to be a buyer on it. And we could see the supply zone around here come in and re-exert itself and maybe push prices back down. So that's one of the key reasons why Newcrest isn't trading up there, because there's still some risk that we could get far less than the current value or implied value. And the other thing is it's non-binding. So Newcrest is allowing Newmont to come in now and really look at the books very carefully, do that due diligence, as we call it, to make their final decision as to whether they want to proceed. It's non-binding. They don't have to proceed. So it's risk-reward. Yes, there's some reward in the chart here that if all goes perfectly to plan and the Newmont share price doesn't collapse, it stays at least where it is, it's worth about 32. It's worth close to 33 if you add back the benefit of the franking credits. But the risk is it doesn't happen. And then where's Newcrest going to be after that? Okay, and it could be much lower. Buy, hold, or sell on Newcrest Mining. I don't like this candle. It's not a great candle. I liked the candle on Thursday when I got up on Ausbiz and I said, hey, hold Newcrest. Don't be afraid of holding something that has gone up a long way. That you might look on the chart and say, oh well, it is at a supply zone. If you hit those supply zones with great candles, and one thing you can be sure of, if you hit that supply zone with big black candles, there's supply there. If you hit it with big white candles and lower shadows, there's no supply there. Don't worry about it. That was the message. But we are seeing the supply come in here, and it's still a live candle. We don't know where this is going to close. I'm going to give Newcrest the benefit of the doubt on the basis of the incredible trend and say hold. Look, if you were really, really jittery, you could offload a third if it closed as bad as it looks right now. But even then, it's such a huge gap up. I think that is just being too jittery. So I'm going to go hold on this on Newcrest. Is it a buy? No, it's not a buy for all the reasons I discussed. I don't think the reward to risk warrants a buy, and it's too far away from my light green zone for my liking, and the candle's not great, let's face it. Is it a sell? I think we've covered that by saying it's a hold. So let us, I know we're stamping all around this one, SLR, but we can see that it is inferior significantly to the gold price, inferior to some of the better gold companies out there. For example, Northern Star, which is getting a nice boost today, probably next cab off the rank if somebody's going to lob another takeover for an Aussie gold miner. Happy to hold that one, no issues at all. And looks amazing. I'm going to refrain from calling a new buy. So if you've got it and you've been listening to me talk about it for many weeks and months now, you can hang on to it, I think. But if you don't have it, you're tuning in for the first time, then I don't think we're buying it here. Just too far away again from that long-term trend zone. I want to see how this candle closes. But a solid hold on the basis of a wonderful short-term uptrend. That's the light green zone, and the long-term trend is exemplary as well, and held nicely down here with that double bottom. So I know I keep doing this, but back to SLR, it's not that exciting for me, to be honest. So if you've got it, there's certainly enough in it. Price action has swung back to the upside, so we do have higher peaks and higher troughs, indicating that, yeah, look, in isolation, in the little lunchbox in which Silver Lake Resources operates, we do have higher peaks and troughs. We've got rising points of supply. Okay, interestingly, to date, it's down, obviously, on the back of the lower gold price over the last couple of sessions. And compare and contrast that to, even Northern Star, which is actually up today anyway. So this is a little POS probably being formed up here. It's still a live candle. So rising points of supply, rising points of demand, that's fine. The candles are pretty good. There's plenty of white candles coming in there, but I'm concerned about, obviously, how powerful this long-term trend zone has been at impeding upwards price action, and we're in that zone now, and here we are with a black candle today. I could go hold on the basis of the price action, the developing short-term trend, but it's not a buy for me. No, I just don't think there's enough in that. Okay, with that in mind, then perhaps we can look through the rest of the gold sector and silver sector to see if there are any companies that are worth continuing to invest in at this stage. And let me find my watch list here. So we've done obviously Newcrest and Northern Star. Let's have a look at Evolution, which is one I haven't been that positive on. It's in that Silver Lake camp where I said, well, it's probably going to go up, but probably not going to be the best one in the sector. Hey, it's actually done pretty well, to be fair. I can hold it if you've got it. No problems there. 350, big point of supply up here. Is that enough to let some go if you've been suffering for a long time in Evolution? I know a few people out there listening probably are suffering on this one. Let's watch this candle. If this candle, you can see the little shadow up the top there, and the little shadow is the line part pointing out of the top of the candle, and that indicates supply. Because I think the only way you can create a shadow is to move higher, right? And moving higher indicates an excess of demand. But at some point, that demand is met. So as we're moving up, and it's going to be hard to do this because I've only got a little bit of room here, but as we're moving up, we've got an excess of demand, don't we? Okay. And then we hit a point at some stage, which is right at the top of the candle, where we reach an equilibrium. Okay. So at the top of the candle was an equilibrium. Nobody can argue with me on this. It is a fact of the matter. And we can talk about all sorts of things, you know, how old is the universe? Did it start with a big bang? We could talk about religion and politics, and there'd be plenty of questions and plenty of grey areas. But I can assure you that as we were moving up to create this shadow, there was excess demand. We reached an equilibrium point where demand and supply were equal. That is unequivocal. That had to have happened. There's no other way. And then we moved to we're moving into a period of excess supply. Now, this is all within one candle. What does that mean for where Evolution's going to be in 6 months' time? I wouldn't have a clue. It doesn't mean anything. This is happening within one candle. So understand, I guess, the scope as well of this analysis of demand and supply. And that's why we don't just look at candles to predict where the price is going to be in 6 months' time. We're going to use price action, we're going to use trends, we're going to use other things. But it is telling us that there is supply. Supply is manifesting itself in and around the old point of supply, and at 350. It's still okay. I know this is a long story and I need to cut it short. But if that shadow were to grow and grow and grow and cause the close to come all the way back down, to be a very small white body, like a doji, so in line with the open, or even a black candle, then that would indicate enough to me to take a bit off the table on the basis that we have reached that point of supply, and then to see how we go on the rest of it. Okay, so what I'm trying to do here is give you a set of tools, basically, to make your own informed, independent decisions, and not to just wander and blunder through your portfolio and through the stock market, not knowing what to do. Okay, you are making these decisions based upon not what you should think is about to happen, but what everybody's doing in the market. Let us keep moving down the list here. PRU. I think this one's fine. Now, let me zoom out. It's important we do get the bigger view there. It's hovering and holding, and it's just fine, isn't it? It's hitting these heights. It's dealing with this area of supply. The candles aren't brilliant, don't get me wrong, but it's fine. I don't think you need to do anything on that one just yet. So a hold, obviously, it sells off the table, but certainly holds on the table. Buy, I'm not a buyer just because there's too many black candles in and around there. We're just waiting for the next demand side candle. What does the next demand side candle look like? Doesn't look like that. It's going to look like this. And if we draw it once per session, then I don't have to draw it again. So if we see this on Perseus Mining, because everything else is in place, and this is why you look at charts like this and you go, I've got to keep an eye on Perseus. I've got to keep an eye on any chart that has the foundations, the building blocks for a long trade. And then I'm just waiting now to get the right candles around here. So happy with that one. And just on the tour to gold here, BGL, which I think looks great. Look, given that gold's been down the last couple of sessions, I think that's holding up pretty well today. I don't think that big shadow there, that's a silly thing. So I don't think that shadow, it's not a big shadow. I think that little shadow there is a problem at this stage. So happy holder on Bellevue Gold. And one of the better looking ones out there, EMR, amazing. yeah, we've talked about this one many times in these sessions. Happy to hold it. Could you buy it? I don't see why not, actually. If it closes, if that candle closes as good as it is, I know it's a long way away from the green zone, but it is a monster. The only thing that might hold you back from going all out buy here is the fact that it is a long way away from the green zone. And we're trying to get, so remember what I said about PRU, we're trying to find stocks that have those foundations, and then we're looking for those candles. Okay. And what a monster candle that was on Thursday, and really no surprise that today's doing so well. So look, happy holder, let's say, on that one. To Grey Mining, another one we've been very positive on. And I'm going to go ditto on Perseus. I really like this one. It's having a bit of trouble here, but not all that much trouble, I think, dealing with this point of supply. And it makes sense that it stops here and it pauses here. If something is having taking a bit of time to deal with a level, and it's a level that makes sense to us, I think that's okay. We just need to see the right candles. Happy holder on that one. And GRR Golden Roads. This one's a little less certain, I think. There's your point of supply. There's your manifestation of the supply. So you can see it's starting to respond at that level, and then not great. Look, I can go hold on this one. I don't think it's so sinister. You need to do a whole lot just yet. And maybe it's just going to take a little bit of time, like Perseus and the other one there. What was it, De Grey, trying to get through that level. So I'm going to go hold on that one. Red 5 coming up on my watch list here. Look, not that exciting for me. What we're missing here is the volume. So when I get to these small ones, I want to see if there's a pop-up, if it's come on, the most massive, exciting volume, just to say that we're back, we're focused on this again. But I don't think so. So if you've got Red 5, I don't know, you'd be probably more looking for an opportunity to get out than to get in. Ramelius, this looks fantastic. Again, another one of my quote-unquote famous favourite. I hope it become famous, my tips on gold over the last few weeks, because I have told you my favourites are Newcrest, Northern Star, Ramelius, and Resolute. My 4 top picks there. There's Ramelius. It looks fantastic. Is it going to get into this area here and maybe have a bit of problems? Well, we'll see when we get there. Until then, happy holder. I don't think you need to do anything with that one at this stage. Can you buy it here? Well, I think it's too close to its supply zone, isn't it? In terms of reward to risk, if you need to put a stop loss on, you want to get it beneath a couple of points of demand. Okay, so here's an old POS, should act as a point of demand. Here's an old pod, should act as a point of demand. So we want to get a stop loss in a place that's not tucked away nice and safe there. And if you're getting in at current levels, I just think it's just too far away, isn't it, from a decent stop, and then you just don't have the reward to risk. So this one, whilst it's fine for a hold, I think it fails on a reward to risk basis for a new trade. And then RSG, which I said was my other one, which is my favorite. You can see there how well that's done. Do we need to sell this one here? I don't think so. There's nothing in the candles there that looks so sinister that would suggest you need to get out. We're actually through that point of supply there, and then the next one's probably not until there, so I think we're fine on that one. And SBM, geez, it's pathetic. And this is why you can't just say, oh, gold's going up, I need to go buy gold stocks. Oh, which gold stock hasn't gone up yet? Oh, SBM hasn't gone up yet, I need to buy that. It's just the most faulty logic, ladies and gentlemen. Please don't make that mistake. There's no reason to own that one. And TIE looks okay, not great. I've probably missed a bunch of them. Let's do quickly silver there. ADT. I don't know why this one hasn't got going. Silver's so strong. I know they're not producing it. They're very close to it. But I can't explain that. It's a little bit concerning, the fact that you've had so many positive drivers and this one hasn't got going. But I'm going to go hold. I'm going to go hold on the basis that the trend is still very strong. And then SVL is the other silver stock there, which has had a bit of interest come in there in the volume. And I could go hold. I'm not a buyer, I think, at this stage, because we're going to have some supply in here, and there's maybe a little bit of supply even manifesting itself in the last few candles. But can certainly go a hold if you're lucky enough to have it. Okay, that was a pretty massive tour de gold, ladies and gentlemen. So let us keep moving here now. And I'm just going to go quickly, very quickly here for Telix, which is another one from Adonis, but it is a nice chart. I think if you've got it, hold it. There's no question about that. The only question is, look, can we add some risk even now? And I'm going to say yes. I'm going to say, look, this is a bit of a higher risk play. It's a high risk suggestion from me on the basis that there is some supply in here, and look, there's going to be some supply there that we're going to have to deal with. But I think there's enough in this price action, enough in the duration of this consolidation phase, and most importantly for me, these candles are very white through here. and some nice lower shadows as well. So I'm going to say, yeah, look, it's a little bit, it might go down in history as being a bit premature, but don't forget, when I say we're adding risk, we're just dipping a toe in the water. And, I say 1/3, but you might say, well, if my end result is to buy $1,000 worth of stock, I'm only going to buy $100 or $200. But I just think there's enough in it now to get some risk on this one if you don't have it on the basis of the short-term, long-term trends, price action, and candles. And we know we do have a point of supply to deal with here, but we're going into this eyes wide open, and that's why we're not adding the whole position. That should say POS, obviously. And let us keep moving on to the next ones. And I've got Craig's, don't take this the wrong way, Craig, but he's going a bit boring here on Commonwealth Bank, isn't he? But let's do it anyway. I know it's popular. It's not coming up there because it's there. Oh, inverted head and shoulders pattern, Craig, perhaps. And they are valid patterns in my experience of researching price action. You don't discount your inverted head and shoulders. I feel they do work. And I know I'm missing a few bits and bobs in here, but just to keep it simple and point out what I'm seeing there in terms of an inverted head and shoulders. So this is the... obviously this is, well, it's actually, technically that's an MPOS, but that's your head. And then we've got a POS here, which is, I don't know, what do you want to call it, shoulder 1 or whatever. And then we'll go another POD, and that's shoulder 2. And I don't know why I'm mixing up my POSs and my pods today, but I am. A pod and a major pod. And let me explain to you why that's a major pod. Okay, and not just a normal pod. So these, I'd say, just normal pods. This is a major point of demand because it has 2 pods on either side of it. Okay, so, well, that are higher. Okay, so your major pod is your lowest pod between 2 higher pods on either side. And by definition, that creates your head and shoulders when you think about it. So I might be looking at something where I say, okay, well, that's a major point of demand, and therefore it's an important swing low in the context of this changing trend. And other people might say, well, that's an inverted head and shoulders. We're just saying the same thing, but we're defining it differently. Could I buy it here? It would only be a super cheeky, Craig. And, look, short-term trend is trying to turn. We're seeing some evidence that the short-term trend is going from offering dynamic resistance to offering dynamic support. That's good. That's positive. That's your first step. But I don't think we've confirmed yet that the long-term trend has gone from offering dynamic resistance, dynamic support to dynamic support to dynamic resistance to dynamic support. So I would like to see how it deals with this, and then maybe something like that. I could see myself getting involved. I don't mind if you were to, and I'm just going to put a question mark next to this, go plus 1/3. That is super, super aggressive in my opinion, given that we're still trying to deal with this trend, long-term trend, but not the worst thing there. Look, I'm curious now. Let us head over here and type this in. And what we're doing now is we're going to the Thomson Reuters Refinitiv Icon spreadsheet, and Thomson Reuters global data provider collates through their Refinitiv Icon product, broker ratings, not just ratings, but also price targets and broker forecasts. Not sure why we're not getting these 2 rows here. Sometimes the spreadsheet is temperamental, but I think we will be able to get a valuation on this one regardless. And we do have 14 brokers covering. You can see there, their highest price target is 104 compared to the current price of 99. So it's definitely at the top of that price target range between 104 and 80. In fact, the broker's average target is 91.58. So it's saying that at the current price, CBA is close to 8% overvalued. Their overall ratings, in fact, a sell. How about that? So brokers are pretty sure about this one. 5 holds, no buys, no strong buys, but 9 sells and 1 strong sell. That's interesting. I don't think we've ever seen that in the history of live market analysis. Brokers so vehemently opposed to owning this one. EPS line, we like to see bottom left, top right, and we're definitely not seeing that. It's very lumpy at best, and it's going to be pretty lumpy going forward. And in fact, it's so lumpy that by the end of the 3-year look-forward period, there's actually no growth. So we're paying, according to the brokers, the look-forward periods. What you're getting, not what you've got in the past. What we've got in the past will be here historically. Brokers have been prepared to pay 21 times nearly earnings. Absurd, isn't it, for a company like Commonwealth Bank? But they do. I don't know why. It's just what they do in Australia. We pay a premium for CBA, best bank in the world, perhaps. So you've got no growth, and yet you're paying 16 times earnings. Typically, the market PE is about 15, and typically the market growth rate's about 8%. And this is why my spreadsheet says, look, it's probably more than 7.5% overvalued. It's probably more like 10% overvalued. It would have to be 10% cheaper to get to fair value. It'd have to be a lot cheaper than that to get to be good value based upon what we're seeing on screen. But they're forecasting, they'll move. They won't be the same next week. The brokers are always changing things. I can't buy. I'm looking for red flags. I think that is a red flag as to why I shouldn't be so aggressive at chasing a chart that looks like this. Okay, are we getting now how we can bring together the fundamentals and the technicals? Okay, let us keep moving. Damien's asking for Wesfarmers, which is a nice little segue from the CBA chart, because I think Wesfarmers looks really good, actually. I always get too enthusiastic. I think Wesfarmers looks good. Really good would be like, Newcrest or Northern Star. No, I think Wesfarmers looks good. I've probably got a little bit excited there. It's good. Okay, short-term trend's turning up, long-term trend is turning up, and all the important stuff we want to see. And you can see why I've drawn all these arrows in the past. I said, well, it was, dynamic, or the long-term trend was offering dynamic resistance. Okay, we know that on the way up, dark green zone supports price. We know on the way down, it's not dark green, obviously. Traffic light system goes to pink or red, and it resists price. And it's only until that we see that long-term trend zone start to support price again, which is what's happening in here with these arrows, that we start to say, okay, well, this is something I can trade now. So you can see my scratchings last time. I said plus 1/3, plus 1/3. Happy to get involved, and look, maintain that. I think it's a hold if you've got it. If you don't have it, I can't see any reason why you couldn't continue to add a little bit of risk there. I would say if you've already added risk, don't go overboard, because the candles aren't, rocket ship emoji sort of stuff. But yeah, I think if you're long-term super fund and you're looking to pick up a quote-unquote blue chip, you probably can't. You probably won't do too far wrong with adding some Wesfarmers here to your long-term portfolio. And just quickly to compare and contrast, perhaps even with CBA, because they're both in that same frame of mind. I know, what am I going to, can I add a good dividend-paying long-term blue chip to my company? 14 brokers, coincidentally, also covering $50 is their average price target, which is saying that Wesfarmers, funnily enough, is a little bit overvalued here as well. Highest price target, though, a bit better, or allowing a bit more upside there at 64.10. In terms of the ratings, it is actually a really polarizing company, isn't it? One strong buy, 4 buys, but at least we have some buys, 6 holds, most brokers in the middle, and then 2 sells and 1 strong sell. So 3 brokers looked at this and said, no, I don't like it. EPS line, is it bottom left, top right? No, it's not. It's actually pretty lumpy as well. And going forward, well, it's actually not too bad going forward. We're going to get 8% compound annual growth rate over the look forward period, which is a market perform pretty much, but we're paying a bit too much for it, I think, at 21 times. So what the model will do is we'll start to say, well, yeah, that's what the brokers are paying. I know 8% is probably not good enough, but given what the brokers are prepared to pay, it's about fair value. But my valuation and the broker's valuation are pretty close together, to be fair. If you were to go by historical, let's have a look historical. Yeah, brokers were happy to pay a bit more for Wesfarmers in the past. Look, I don't think that there are any red flags here. Remember on Commonwealth Bank, I said, yeah, look, I think that's a red flag. That's enough to keep me back. I don't think there are any red flags on Wesfarmers to hold me back from buying it, because that 21.1 is actually, as we showed there, pretty low in the historical context. I'm okay with it. Okay, let us keep moving. And we're going to go to REA, which is another one of those we're getting a bit of a theme here, aren't we? The turnaround plays that I've picked in the past. This one's from King. They're all from different people. And you can see 1/3. I think we're quite early on this one in terms of showing the 1/3. But happy holiday, King. And in fact, I can't see why you can't continue to add risk on this one. The candles are pretty good, assuming today's candle closes at least where it is. And it is, again, another textbook example. And you should expect to see the same thing over and over again from me. That's called consistency. So it's like, oh, Carl's a broken record. He just bangs on all day about demand and supply and, dynamic support and bloody green zones and traffic light. This guy's just getting on my nerves. I wish he'd say something different. Price action and white candles. You know what? I'll never say anything different because this is a methodology. It is a system for tackling markets. It is a way to be consistent. So I can go, you know what? Every time I bought that white candle, every time I saw that setup, this was the outcome. If and either it's good or it's bad, I can measure myself and go back and say, look, I needed to see more white candles there. I just didn't see enough of them. That's where I made the mistake. But I can go back and see where my mistakes are if I'm consistent. If I got on here, like so many other technical analysts on TikTok and YouTube, and just say silly stuff, like the RSI is overbought, or the RSI is oversold, or the MACD is doing this, if you see anybody quoting RSI overbought, oversold, or anybody quoting a MACD full stop in any technical analysis online, please switch off or skip to something else, because I can tell you they have no idea what they're doing. They read a technical analysis textbook and they think they're bloody experts, but they're not. Anyway, if you're random in your approach, you won't know where you went wrong. If I did all over, oh God, where did I go wrong? It has to be consistent. So no apologies for the fact that it's textbooked, consistent every time. REA is fine, continue to hold it. Let us very quickly go here after my my rant. And I'm happy to debate anybody on these things, of course, because I guarantee I've been doing technical analysis, I'm going to say 2 or 3 times longer than anybody else you put me up against. And that is the promise. It'd be pretty rare to find anybody that's been doing this as long as I have, or as long as I have. Let us go REA over here. And it just means I'm old, everybody. REA, 13 brokers, 129.20, says it's overvalued. How about that? We're happily buying Wesfarmers and REA, which are overvalued here. And the brokers, two strong buys, 5 buys, 5 holds, a couple of sells in there. EPS line, bottom left, top right, pretty much. So this is probably the best one we've seen. Yes, there's a pandemic in there, so we can forgive that one. But I'd say that's the best earnings history. And I would say the best going forward with a really nice 14%. But you're paying up for it. Look at that, 36 times earnings. And ordinarily, if you see 14% there, you'd expect this to be pretty good. But because the PE is just so darn high, it's saying, well, it's probably only about, pretty close to fair value here, but a little bit of upside. Anyway, this is not a red flag for me because honestly, I don't care what the brokers think. I'm happy to continue to add risk to REA based upon that valuation. Now let's go to Hanelli, and I suspect this is going to be yet another big blue chip stock. Bit of a theme today, isn't it? That is turning around. And I can't go ditto on the other two because on Wesfarmers, on REA, and, well, we didn't quite get there on CBA, did we? Because a couple of reasons. I don't like this. It's too close to that Hanelli, and I think there's actually a little bit in here as well. It doesn't seem to be worried about it, though, does it, Hanelli? I mean, look, the white candles, it's getting up there. It's going, there should be some supply here, but I'm not seeing it. So it's all good, actually, for now. Big black candles in there would change my mind. It's going to get me to a hold. I think you know where I'm going to go with this. I can go a hold it if you've got it on the basis that it doesn't seem yet to be afraid of those levels. The short-term trend is up. It's back above the long-term trend zone. That's fine. But it continues to wobble. And the long-term trend zone actually is one of the few examples, isn't it, where we see that it doesn't seem to mean a whole lot for this one, which is baffling for me. It could also mean that there are other external factors at play, for example, takeovers and things like that, which we know are in play, and mergers and demergers of the company itself can sometimes cause the technicals to go a little bit askew. Hold, not a buy, too close to the supply zone for me, but looks fine. Dare I go in here? Look, I'm only doing this out of curiosity. REA, I think Wesfarmers, they deserve to be in here because we're thinking about buying them. We thought about buying CBA. So, of course, let's look at the valuation. I don't know if I'm thinking about buying AGL, but just given those candles look so good, let's check it out for completeness. We're doing a bit of a retrieve there. Hopefully that comes through. I've got 2 kids. One, well, she's turning 14. One's 11 on school holidays here in WA. So I can guarantee my internet's jammed up. I'm surprised you can even hear me. There you go. No, that's retrieving. So let's keep moving. Oh, server response. Well, we didn't care so much about that one. It might come back. I could put myself on mute and scream at the kids to get off the internet, but I don't think that's the problem. NXL. Let's keep moving. Nuix. Oh, this is amazing. This is from Michael. Okay, we're getting all of these interesting quote unquote blue chip. I don't know if Nuix is a blue chip. Certainly when it floated, they told you it was. Turnaround plays. It's one that keeps coming up on my radar, Michael. And when I do the Twitter shortlists in the afternoon, sometimes I keep grappling with whether I put it in. Maybe I did, but it's because it was certainly looking pretty good until this big black candle, which gives me reason to pause. I can go hold, but it's in some trouble here. And I would say if it closes back beneath that low there, let's say call it 110 or worse, then I think you are exiting on this one and saying, well, I bought the dummy. It got me. It's got a lot of other people, but at least I didn't buy it all the way back here, right? And I didn't hold it all the way down. I didn't start fishing on this one. And that's all we're doing. This is a fishing expedition. That's all this would be until the trend is really well established. But it is above that long-term trend zone. The long-term trend zone appears to be supporting it. The short-term trend was trying to turn up. And the candles were predominantly white. The problem is these pesky black ones keep popping in. And just understand that the leopard doesn't change its spots, really. And, you can see that one there and that one there. And if you go into a trade like this, understand what you're probably going to get. And it is, again, a fishing trip. But we might have to pack in the rod and the reels here if it closes beneath 110 and go look at something else. I can hold on the basis that it stays above that level, but it would become a sell and exit on below that. Can it become a buy? Look, I don't think I'm all that interested on buying it until it did something really amazing up and around what is now going to be, unfortunately, for Nuix. And if you've got it, a bit of a supply zone through here. Okay. Let us keep moving down the list. And Tanya has AVH. Don't know if I'll do both, Tanya, because I want to get through the list. But it looks fine. What were we saying last time? In fact, we started to lighten the risk here. You can see minus 1/3. Certainly on the basis of a close beneath that low. It should mean you should still have 2/3 left. I'm not sure why there are 2 1/3s there. I'm not sure. Go review the tape. But knowing how I usually talk about these things, we would have said holding 2/3. You can see this idea of holding 2/3. I think stick with that. I think you could have even added some risk potentially on a day like this. Looked pretty good. Even either of these 2 days. Happy to add the risk. It's disappointing today, though. I don't think that's enough to sell it. I'm going to go hold, but I don't think you're adding risk on a day like today with that big up shadow because you're getting the breakout. We should see demand come in so that the momentum traders, the breakout traders come in. They've come in, but they've been hit by supply. Okay, there is some excess supply just lurking in the system here, and that's the problem. Okay, so happy holder. Not a buy just yet. Okay, but wait for the right candles to come in and then happy to add even more risk on that, even though I know it's had a great run, but that's why I'm interested in it. And let's maybe, super quick here, SDF. So Steadfast, great chart there for you, Tanya. Happy holder there as well. Okay, so if you've got it, hang on to it. No reason to sell it. It's boring. I know it's boring, but sometimes boring is okay. If you're looking for a boring stock that pays a decent dividend, that's probably not going to give you any headaches, there it is on screen. Okay, fairly capital stable, collect the dividends. Some people are after that sort of thing, and that's fine with me. Let us, look, I guess let's go here because we're kind of talking about buying this one, aren't we? So assuming SDF, that the kids have taken a break from the Roblox or whatever it is they're doing. That's coming back through. Mean target is 617, which allows a little bit of upside. Generally, we're at a buy here, 7 buys, 3 holds, no sells, which is good. EPS line is a solid one. Definitely bottom left, top right, and still holding steady through a pandemic. How we're going in the future, it looks good also for pretty reasonable growth, market growth there, but paying a bit for it, aren't we, at 21.8? I wouldn't say it's a screaming bargain. That's what this is down here, but there's nothing so sinister in there to suggest that we couldn't buy it if it had the right chart. It's just not screamingly cheap, that's all. 21.8, certainly a very, very conservative hurdle rate to apply, considering the historical PE is even much higher. And if I was to apply an historical PE, it would make it look crazy undervalued. Okay, but let's go with what the brokers are thinking in the future and say that it's looking fair value here. Okay, let's go to Hanelli. Okay, the last request on she's just because I know it's not just Hanelli that has this one. I know many people have this one because we've been very positive on it in the past. I think that's probably the candle, isn't it, Hanelli? That's probably the candle, don't you reckon? It's just in that zone. It looks pretty similar to this one. Okay, so I don't mind, and then we've pointed at this one in the past. I don't mind just, look, I don't mind. We've had a good run. I don't mind just doing that. I'm not saying we're going to get out the whole lot here, but yeah, I don't mind doing minus a third there. Now, this is a live candle. Okay, you need to come back and see where this candle closes. If it closes any better than where it is right now, hold fire. Stick with it. If you get that, and again, it's just supply zone, double supply zone. You know, supply's got to be there somewhere, and we're probably going to get a pullback into the light green zone, and that's all. That's the only reason why. It's a buy? No, for obvious reasons, but it's not a sell as such. It's a manage your exit. Okay, lighten the load. If the candle stays as bad as it is, if it gets better, no. Now this is again super interesting. Haraju, different person, asking about Domino's. Is it again one of those big beaten bit down blue chips that we can maybe scoop a little bit up on? And I don't know what the scratchings were last time. I think we would have said, I'm just looking at the scratching saying, well, long-term trend is down, short-term trend is down, need to see this price action and quote unquote the right candles before we could even consider it. Well, it's actually done some of these things, hasn't it? Look at these two wonderful candles here. I'll draw them in a different color. So this one here and this one here are really special. I'm really happy with those. And look at this. I've given you my my light green zone, haven't I? You've heard me say it a million times. What we need to see is the right candles in the light green zone. And this candle here is the right candle. Okay, so I'm talking about this one here. That is the right candle. And we've got a really shallow response here. This one's okay. You know, it's good, I'd say. And this one is very good. That one's okay. So this is all very good. And this is fantastic. And this is fantastic. And then we're going a bit sideways here. I think this is fine. I don't know if I'm at plus 1/3 unless you are the most kamikaze aggressive trader. And some of you say, well, Carl, you know, Domino's is blue chip. That's not aggressive buying. And it's cheap. You know, hey, surely it's not aggressive. It was $170 and now it's only $50. Why would you say it's aggressive? Look, I think it's aggressive, but let's wait for see that high there. Either another beautiful white candle. Okay, if the white candle occurs before we take out this high, and that high there you saw it there, 52.59. So two ways to play this. Okay, and all we're doing is going plus 1/3, and it is a super cheeky. This is super cheeky. Kamikaze, right? Toe in the water. Okay, and we're just dipping the toe in. If it closes above 52.59, so 52.60 or better, or we see another white candle in between. Okay, because it's done the stuff I need to do. And you might say, hey, Carl, look, you know, that long-term trend, aren't you worried about that? Of course I'm worried about that. I'm extremely worried about that. That's why it's only 1/3. And we might find that this 1/3 sticks and we get another reason to buy it, I don't know, in here or in here. And, you know, we're building a position in Domino's and eventually it goes back to 170. And we look back and say, look, what a great system we had to get us in, not quite at the bottom, but, you know, close enough to the bottom and with some confidence that we're turning around. And you can see what's happened in the past. I mean, it kind of looked like it was turning around here, didn't it? Yep. And then the long-term trend zone killed it, unfortunately. Cheeky 1/3 there, no more than that. I know some people scream at the screens and they say, Carl, stop doing the fundamentals. We just want to see the charts. But I'm actually just very curious here. If we're going to go plus 1/3, let's see what this is. We've got 14 brokers, 62.13 is the median price target. So brokers are fairly positive. I suspect that's more because they haven't lowered their targets enough yet to reflect the fact the stock crashed, and they tend not to do it because they don't want to admit they're wrong. They try and keep the price target up, hoping that in the long run it goes back up. They don't look like such idiots. One strong buy, 4 buys, 9 holds, no sells yet. no sales yet. It tanked, right? So somebody was selling it. Net EPS line, sorry, bottom left, top right, no lumpy, and that's why it's come down. And then looking forward, pretty sharp decline actually here, and then apparently becoming the most amazing growth in the future, if you believe it. And this is where you might want to start adjusting to something like this and saying, well, I'm not so sure the brokers are, maybe they're a bit optimistic there, right? So maybe you go moderate there. And for 22%, could I pay 22 times earnings for 22% growth compound? Absolutely. I actually think that's on the cheap side, which means, yeah, look, I'm with the brokers. If I turn that off, then I think you will find we're almost exactly with the product. There we are. And so that's just a coincidence, but it shows the spreadsheet does work very well. We're actually spot on there with the brokers, but you decide what you want to do there with your discount rate. 22.7 is very low in terms of the historical context. And I think it is an appropriate PE for that. So happy to say that Domino's actually does look a bit cheap there at current levels. How about that? Now from Nicola, can I add some risk to ALL? Okay, look at this. We're either this is the most giant coincidence, ladies and gentlemen, or I have brainwashed you to look at very specific things in the market, and because they're occurring, you're going, oh, this is something I think Carl would like, or I think I should look at this closer because it's meeting the criteria that Carl set out, and you're all spot on. We did add some risks to this in the past for the same reasons, and it did whatever it did. I don't know what it did. Hopefully you hung in there. I don't know. If you didn't, who cares, right? It's just a matter of look at this with fresh eyes for the first time, and it's doing all the stuff we've talked about earlier on. I won't rehash it, but I like the candles. I like the price action. Long-term trends are heading up, short-term trends up, but we're getting dynamic support there. So happy to go 1/3 on this one. I think this looks really prospective. So a happy 1/3. In fact, I would favour this one over Wesfarmers. I think this is a far superior technical setup to Wesfarmers because all those white candles, I love it. And I'm going to say even, well, REA was very good, but I think this is probably just pipping even REA. So yeah, okay. This is a super interesting session, and it's kind of going to force me to come back here. And don't worry if you're on the stream, I'm going to get to your questions as well before we adjourn for the day. Like I'll just answer everybody's questions and then some. But just bear with me, go through the process, and hopefully you pick up something new each time. Now the reason why this isn't working is because we need to match this FY end to this one, and you can see everything starts to work. And we've got an average price target here, 41.03, which allows 10% upside. So that's fine for the brokers. 2 strong buys, 9 buys, 2 holds. So they're very positive on this. No sells at all. EPS line, bottom left, top right. No, it's not. But we couldn't really do a lot of gambling, could we, in 2020? But they have responded with a massive now and growing online gambling offering. But that's also brings up this idea of whether this is one of those ESG stocks as well, right? It's not. It is very much a company that makes money off people gambling. So you need to be okay with that. Going forward, I'm not telling you whether you should or shouldn't, really. That's a personal preference. Do you want to know my preference? Oh, I probably shouldn't say, well, I don't care. If it's going up, it's going up for me, But I'm sure people shout at the screen, and you're probably right too. 9% compound annual growth rate over the forward period, which is good. I mean, it's solid. It's better than the market. And we're not paying that far off market rates. I'm guessing this is only showing overvalued there because we've still stuck at low, and I've no reason to change this to moderate at this stage. I don't think these are so ridiculously astronomical that we need to change that. So I'm happy to say, yeah, look, it's probably on the right side of fair value, and I have no reason to doubt what the brokers are saying on that one. 17.8 is crazy low. So this is such a high hurdle rate. I know it's a low PE, but you've got to think inverse here, right? Because low PEs are better. So it's a really high hurdle rate that we're applying to this. So it's probably even cheaper than it looks on screen there. Okay, let's keep moving. So no impediments to buying Aristocrat. In fact, I reckon it's looking like pretty good value here. Let's go to MIN, which is interesting as a segue, David, because it's kind of one of those big blue chips that aren't turning up after a long downtrend. In fact, if anything, it's turning down. So turning up after a long downtrend, it's turning It's turning down after a long uptrend, if you get what I mean. It's the opposite. In fact, if we took this min chart and flipped it 180 degrees on the vertical axis and changed all the blacks to whites, I think we'd get REA or we'd get Aristocrat. So logically, therefore, if we're looking to buy those other ones, we must be thinking about selling this if we are, again, consistent in our approach. And you can see where these minus 1/3 are all over the screen right now. And the last thing I said, look, if you hadn't acted upon any of those, if it closes beneath, and I would have hovered over here and would have said that low of 75.81, so low of 75.80 or worse, then you are going to exit this one. You're done and dusted on mineral resources. I would have said, again, the only thing that could change my mind is if it starts to do high peaks, high troughs, and you get the right candles in the green zone. It hasn't done that. It's actually moving more towards the sell zone than the buy zone, or it's moving more in step with the sell scenario than the buy scenario. So, yeah, reiterating where you would be exiting that. I don't think there's any reason to buy it and so it starts to do those things. Because we're not thinking of buying it, I'm not going to look at the valuation there. Let's keep moving. WGX, a couple of other, or at least one gold company we didn't cover before in the gold sector review. It looks fine. Yes, that candle there bothers me a little bit. I would say, if it closes, I'll give you a number here. If it closes that low there, so if it closes to say 147 or worse, Perry, given that it's hit 150 as well, let's just see if 150 was also a bit of a supply zone from the past. So I'm looking at this, and I'm going to, well, there you go. So I'm going to say if it closes at 147 or worse, it's just very conditional, all right? So 1.47 or worse. And I'd just like to type on the screen because when I come back to it next time, at least we all know what I said, right? And you can gauge whether I got it right or wrong. And if you listen to me long enough, you know whether I say things that are right or wrong more often than not. And what did I do down here? Because this is plus 1/3 previously. I'm not sure where, honestly. Go check the tape. I don't think it would have been up there in no man's land, but probably down there. But if it does closes beneath 147, then just knocking 1/3 off, just on the basis that it is a bit of a round number. There is supply there in the past, and the candle is great. That's a little bit jittery. If you're in it from before and you've got a full position, you're still carrying 2/3 of that. You would not be getting out any more than that. And being very generous here for the second one for David, but only because it just looks so good. STX, and yeah, happy holder here. I don't know if I'd buy it. It's a long way away from the light green zone, but the weekly chart is just amazing. So yeah, it's certainly a hold. And I think you're just waiting for a pullback, aren't you, really, for the next buy? So it's on your list, it's on your radar, and you're just looking for an entry point. If you've got it, hold it. There's no reason, absolutely no reason to sell it based upon the candles that we can see there. Those two for Perry. Let's keep going. Shireen A4N. Yeah, look, it's the second stock I'll be covering in the call tomorrow. I'm on the call tomorrow on Ausbiz with Henry Jennings. It's going to be a crack of a show. We've got so many really interesting charts, and this is one of them. I don't know if you saw this in my tweets, Shireen. Maybe that's where you did. And we said last time, somebody must have asked me about it, and I said, hey, if it closes beneath whatever low I gave you, then exit 1/3. I don't think it's done that yet, fortunately, because it obviously popped up today, and that line's there, yeah. So I would have said if it closes beneath that low, exit 1/3. It hasn't. There's no reason to exit 1/3. I would have said if it closes beneath that point of supply, that's where you exit the second third. So we haven't had to do them. Okay, there's been no reason to do these at this stage. So we're a happy holder. Could I buy it here? I can't see why you can't buy it. It's the most amazing chart. But just understand it is a long way away from the light green zone. And that is the only impediment here. So, it goes from a 10 out of 10 chart to an 8 out of 10, but it's still pretty darn good, especially if it closes near the high today. The only other issue I have here is that the dollar's pretty close as well. So in terms of taking some profit, I think you want to just knock a little bit out here at $1. So if it reaches that, I'd go minus 1/3, just compulsory on this one. But otherwise, a happy holder, looks amazing. No complaints on that one as well. Hopefully you got that from me. That'd be nice. IPD. Let's have a look at this one. And interesting pop there. We want to see some volume. Yes, we have got some volume. I don't mind this one. I don't think I'm buying it just yet, though. As in, that's where my brain's going on this. But these are the candles that worry me. Okay. Yes, we're having a little bit of a response back to the upside, but we're still very early in that response. And really we need to see, and you've seen me draw it a million times, I want to see, yes, there's some demand in the system, but let's see how the supply side responds. So the supply side can respond in two ways. Oh my gosh, I knew I should have got out here. All right. I knew I should have got out up here at the POS. This, I'm waiting for some sort of rally. I bought somewhere in this day when everybody got excited. So I got in at 10.5, 11, 11.5, 12, somewhere around there. That represents my break-even point, right? Somewhere in here is my break-even. And therefore I'm going to supply. And for that reason, we end up with something like this, okay? And we create that lower POS. So this is what we're worried about, okay? That's one scenario in terms of how supply responds, okay? The other scenario is we get something like this and supply doesn't make a lot of headway in their push back down. And in fact, demand responds, okay? And therefore we get something nice in the green zone, or even on a breakthrough that POS, obviously it's hypothetical, hasn't happened yet, we're looking in the future, then we could consider adding 1/3 on that basis. But understanding this is a major POS. So maybe I should have just knocked this one on the head at the start and said, look, there's too much going against this. But anyway, working through the logic is not such a bad thing. I need you to be able to, I guess, see these charts through my eyes. Great information, says Anonymous. So Anonymous, put your name in. That would be great information. Thank you. You're welcome. If I have time, can I look at BST, best and less? Another potential turnaround play. Look, plenty of white candles. Like, this is all good through here, but making very little progress. I mean, from just below 2 to just above 2 with all of that effort. It's not the worst thing I've seen. I can go a hold. I'm not a buy. And what I'm really worried about here, Anonymous, is just the strength, just how good this long-term trend zone has been at just smacking up price again. Not a buy. Not a buy. I can go hold. Now, okay, I can't just leave you with hold. Okay, well, Carl said hold, and then it goes down to $1.50. Well, Carl said hold. Okay, well, hold on the basis that it continues to print white candles. It continues to do this sort of stuff. Okay, and if it gets above this long-term trend zone, then I might change it out to a buy. Okay, but even then, there's so much work it has to do over here. Like, who could be bothered? Like, it's just banging your head against the brick wall. Okay, hold it on that basis. Keeps doing this. If it throws in a bunch of black candles in here and starts, well, in there, okay, and then starts to do this, okay, then I would not call it a hold. I would be getting out. Okay, so if we get into that zone up here and we start to throw the black candles, okay, so pretty comprehensive there, I think. Let us go to RHC, which is that one there. Is this another one of those turnaround plays? It's good. It's good. It's not great. I don't mind it. Just that. I think we've got supply in here. That's all. POS, but not the worst one we've seen today. I think this is very, very healthy down here. So let me draw the green zone. I think this is really healthy. And the fact that we're just sort of pushing above, see this little zone here, we're just sort of dealing with it. Look, I don't mind it. If you've got it, hold it. And I haven't been able to say that about Ramsey for a long time, have I? Because the chart's been pretty awful. So happy to move to a hold on Ramsey. I love these white candles, and I love the really shallow pullback since they've occurred. So I think there's every chance that this actually continues to move higher and does eventually interact with that zone there around 74. Does it then get me to a plus 1/3? I'm going to stop just short of that and say it's a very solid hold here. Okay, let's go down to NWL, and that's the last for the Zoomers. So Zoomers, I'll hold you there and I'll catch everybody else's requests. Netwealth Group, I'm not going to get to a hold on this one, am I? I think this one is in a bit of trouble. You can see obviously price action through here is not great. Short-term trend down, long-term trend down. Look, today's candle is good. Don't get me wrong, but I'm just not sure it's enough within the broader context here. There's some demand in here. There's some demand here. It's all a little bit ho-hum. Can I get to a hold? Look, only just. And really, that group on hold is growing increasingly tenuous. In fact, I'd say if it closes below 1187, so let's say close less than 1187 equals minus 1/3. That's my opinion. And yeah, you can hold until then, but it's certainly not a buy. I can say that with absolute certainty, John. Okay, let us go to now some of the socials here, and if that wants to work, oh, it's just underneath all this other stuff. Let me get it. So I committed to do one for Kate. Kate's contacted me on the Facebook, and Kate wants to talk about IHL. Kate, this one does not look good, and hopefully you, if you listen to this in the recording, you have caught the rest of the recording, because it does talk about my philosophy on trading. And when we have just so many black candles, and I've talked about this in the last session, and I think it struck a chord with some people. When you see just so many black candles in the row, it is just somebody big sitting on the stock and just selling, constantly selling. And it doesn't matter if it's a good day in the ASX or a bad day in the ASX, or there's some good news for Icannex or bad news. They don't care, because they're in from a much lower price. They could be insiders. They got a placement at 1 cent, and for them, 15 cents, 20 cents, 25, they're still making money. They just want to get out and get cash to do something better. It's trying to pull itself off the canvas, but it has not done anywhere near enough for me to get excited about it. I know you'd like me to go and talk about what they're doing and the contracts they're signing and the great leaps forward they're making in their business, but despite all of those things, or even knowing all of those things, the market is saying we don't care. There's nothing there to stimulate us to overwhelm that supply, that big seller, and probably they're going, why would I want to do this? Well, I'm not crazy. Why would I want to do this and just be involved in something where somebody's just offloading stock every day? So I wish I had better news for you, Kate, but that is not one that I personally would even contemplate buying at this stage. If it does the high price action, the high peaks and troughs, the better price action that is, the trends turn around, the white candles, I'll start to look at it. You might say, hey, well, by the time it does that, Carl, it's 22 cents. And, I could buy some more down here at 14. I say, well, probably. Xantippe Resources is the next one. This one is for Zera. And I'm going to go ditto for you, Zera. This one's also from the Facebook. And I do know, you get into some of the chat rooms, and they do love their top left, bottom right charts, don't they? The hope and the prayer that stock I bought so many years ago because it looked good at the time. I heard about it on the social media. Somebody tipped it to me, and it went up. I never got out, and then here I'm still holding it. Will it go back up again? Oh, I don't know. But no, not on that chart. Sorry, Zera. Don't mean to be nasty to anybody, but that is the way the market works, unfortunately. 4DX looks super interesting. And I tweeted this one last week, and I said, look, I love this candle. This is a super interesting candle. I said, if it can hold at near the highs, and I gave you a number on Twitter, it's good, hold it or buy it. And look, I think it's even better today. The only problem now is just we're coming into this zone, unfortunately. So it's one of those, you kind of had to be on it. Otherwise, you probably, for the most part, missed it. It's if you've got it, hold it. See what it does in here. This one is for Mick. Mick, see what it does in there. Black candles, upper shadows, Mick. Then you might want to take some off the table. I know, Mick, you've probably been suffering on this one for a very long time, and that gives you the ability to get at least some off the table and say, look, at least I took advantage of this rally. If it goes back down again, at least I took advantage of this rally. If it keeps going up again, if it keeps going up, well, at least I've still got some, But I just don't think you want to be that person that holds all the way down, gets the miracle. I mean, this is, let's face it, this, in terms of how many times this happens, this is a miracle, right? And we just talked about, it's a good little segue from IHL and XTC, and either of those could have their own little miracle as well. But it's not, it's possible, it's not what's probable. So when you get this happen, look at all the black candles in here, almost contradicting exactly what I said. But like I said, this is a miracle. Don't be that person that holds all the way down, gets a bounce, and then holds all the way back down again, if you get my drift. Let us go to the streamers, and then we're going to finish here. We're very close to the finish, everyone. And Trader saying hi, Carl. Neil saying hi. Tesh saying, can you have your thoughts on AVH, which I'm pretty sure I did earlier on, Tesh. Hopefully you caught the analysis on that. And I said hold it, but just watch out. There's some supply lurking up the top there, but not enough to turn me off it just at this stage. George is saying, let's have a look at JHX, which maybe also falls into that category of that big turnaround play. I'm not as excited about this. Okay, I think the long-term trend is really strong here. You can see there. We're not trading above it like we were for REA and Aristocrat Leisure, and I don't have to go through the list. The other one escapes me now, Wesfarmers. And many of those other ones we talked about, we were seeing lots of white candles. We're seeing lots of lower shadows. I'm just seeing too many black candles in here. Okay, so I'm not as excited about this. The probability suggests to me we're going to stay in and around this zone, if anything. Okay, and I could be wrong, but if I'm wrong, you'll see it. It'll be all over the chart. You'll see the white candles come in. Okay, you'll see the white candles come in here. You'll see the price action get above this long-term trend zone, come back, test it, hold it, and then start to move again. And really, it's kind of around there that I'm going to start to get interested on James Hardie with some nice white candles. So I can go hold on the basis that there's definitely some good stuff happening, but it's not a buy for me just at this stage. For you, George. S32. Yeah, look, it's struggling, isn't it? It's a bit ho-hum, isn't it? It's stuck in the middle. You can see some bunch of resistance up here, bunch of supply, a little bit of demand, stuck in the middle. I ask you, buy, hold, or sell, and I think you've been around with me long enough to say that, well, maybe there's enough to hold it if it closes beneath this low here, and I'll give you a number. That low there, 417 or worse, I think you are going to continue to manage your exits on this. If it was to get above here, 441, it becomes more of a hold. Okay, above there, it's more of a hold, but I don't think I'd be adding 1/3 on the basis that we should expect a massive amount of supply in and around that zone there. So I've given you, I guess, a path to holding and a path to exiting, but I cannot see a likely path to holding in the near future. And let us go to, that's two for you, George. I think we'll keep moving because we're late on time here. Hack, which looks okay. I think, if you think the Nasdaq's going up, and I did tweet the Nasdaq technical analysis today, boom and squeak, then you're probably okay on something like this. Is that the best chart we've seen? No, it's not. I think it's a hold. I'd almost go so far as to say it's a solid hold. And yeah, look, if it starts to print 880 or better, then I think it's moving more into that buy category. TNE sneaking in there. I'm happy to hold this one. No complaints. I think we might have even gone -1/3 on this in the past. And yeah, look at tagged. It would have tagged you on that one. You said, oh, I got out a third. Carl told me to get out a third. And then it went back up again. Oh, well, okay. You still got 2/3. You still got 2/3, right? But we were taking some precautionary actions there. And I think the market was pretty lousy back then. Go check it. It was #banking crisis. Okay. But we still got 2/3 and a happy holder on that. And you can always add back in because we did get some really nice candles in here. That's up to you. Yeah, happy holder there. Could I buy some more? Not averse to it. Not averse to it. Let's see a better candle than this. It's okay. It's a good candle. Let's see a better one. Oh, look, let's not be too pedantic either. Okay, I'm okay with this one. If you've got it, add that risk. You're now fully invested again. Now, from Kiwi Banter Fan, STA, a little bit ho-hum for me. Not the worst chart I've seen. It does appear to be trying to build itself back up. So we're starting to get some half-decent price action through here, okay? I could go hold. It's not a buy. I think certainly if it was to close beneath 30 cents, there's no reason at all to own it. And I don't think I'm going to find a path to buying it because we're going to see lots of supply probably in here. And therefore, it really is in the category of ho-hum from a technical basis. And again, obviously rushing here can't do all the fundamentals. I'm guessing that Strandline and RNU are in a similar sort of boat there because the charts look almost identical. I could go hold on this one, not a buy. Too much stuff it needs to deal with sort of in and around here. And if it was to close, say, beneath that level there, then you would be getting out, but a hold in between. Neil saying, one thing I found is you keep buying through dips, but better quality. I do like to buy dips. Yes, if we get the right price action. James Hardy from Neil, which we did. South32, which we did. And we are good. I think we're good. Let us head back to here and say thanks for joining me, everybody. It has been so much fun, and we covered not only we cover so much ground, and I don't think we had a single lithium stock in there, so I've got no clickbait at all for the YouTube video. Thanks very much. But we did do our gold review, didn't we? And we got everybody's questions answered, and hopefully you learn a bit. Hey, if you want to come back and learn a bit more, on Thursday I'm doing indices, commodities, forex, and crypto, the big macro stuff you absolutely must know to help you manage your portfolio better. And then USA, hey, if you caught my tweet today, I reckon the NASDAQ is on the verge of a new bull market. You got to get on board with those USA stocks. That's on Friday at 12 p.m. Notice the slight time difference there. If you're not a client of Think Markets, you really should be. I missed one there, Karoon, sorry, Marco. We'll do that one next time. Khan saying you can download my bear market survival guide. That's always a good thing to do, and get in touch with him as well if you've got any feedback. And that's just part of the process here at Think Markets, because we really do want to work very closely with you to get the most out of your investing, whether it be ASX shares or whether it be over 4,000 CFDs on FX, indices, cryptos, commodities, and futures with the best spreads in the market and commission-free on ASX share and USA share CFDs. We are an award-winning broker, easy to use multi-asset platform, world-class trading apps, dedicated account manager like Khan, who will look after you and take you step by step, walk you hand in hand through your investing journey. Head to www.thinkmarkets.com/au for details. Got that right. If you're listening on any of the streaming services, please hit the subscribe button to stay notified of any of my future updates. And very important, hit the like button to make sure you let my superiors know, my masters know that you like what I'm doing, and they'll continue to pay me to do more of it. Apart from that, it has been a pleasure chatting with you today. Hopefully you got lots out of it. All the best if you're trading and investing. Till we catch up again. Bye-bye for now. But before you go, you know the drill. Everything we've talked about today is general advice, has not taken into account your personal financial circumstances or particular needs. So before making any investing decisions based upon this general advice, you should consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is super duper important. Head to our website, download our PDS product disclosure statement, and learn all about us and our products. Bye-bye.